Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, March 7th at about 3:30 p.m. Eastern. Well, the Federal Reserve will head into its March 18th and 19th policy meeting with the labor market strong overall, but showing some potential early signs of weakening, a development that could put the U.S. Central Bank in a tough spot if inflation remains high. U.S. job growth picked up in February, the Labor Department reported today, with employers adding 151,000 jobs. That's well above the monthly growth rate of 80 to 100,000 that Fed Governor Christopher Waller on Thursday said he would view as being a healthy level of job creation. And on that somewhat positive note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today when I captured this chart, the SPY was trading at $576.40. That's about $57.64 on the S&P 500 itself. It is 6% below its all-time closing high back here on February 19th at $612.93. So it went up to that high and then came down below the red line, the 20-day moving average, the green line, the 50-day. They're both coming in here now at 596 and change. And of course, right now it's sitting atop the 200-day, the black line, the 200-day moving average. It was down earlier today. It was down almost below that 200-day moving average, coming in at 571.84. We'll call it 572 to make it easy. It was below that, but it made up that it started turning around this afternoon. Many times the market will turn around on Friday because the short sellers are covering they don't want to go the weekend. However, we did have some good strong volume in here. Well, we've had strong volume for the last 6 days of trading or so, which is common when price is heading lower and getting pretty dramatic. And then hopefully here some buyers will come in, but we'll talk about that a little more. Now, if we look left on this chart, since the SPY has gone from walking up its 20-day moving average, look left here, walking up that red line for most of the time, and I've mentioned this before, for most of the time since November of 2023, when it bottomed, then turned around and started up again. The SPY was for quite a long time, a couple of years, walking up, for the most part, walking up that 20-day moving average. And it went from the lows back in November of 2023 up to, we've had an all-time gain here in the last couple of years of 66% in the SPY. And I mean, that's nothing to sneeze over. That's pretty darn good. So I was sure a pullback would come here at some point. Now we can see that in December, right here in December of 2024, the SPY touched a new all-time closing high back here on December 6th at $607.81. And so much for that relatively, except for those little drawbacks here, so much for that really sweet uptrend that we were enjoying for quite a while. All of a sudden, after that high on December 6th at 607 and change, and that calm uptrend, volatility stepped in. It fell down here, making a December low on December 20th to $580.91, then rallied back up to the 20-day moving average here to 601.34, then fell back down again, then rallied to 600, then fell to the January 13th low down here at $575.35, then rebounded nicely, jumped over the 50-day moving average, went back up to a little higher than the prior high that we had here, then back down and then consolidated in a kind of a jumpy but but positive manner along the 50-day moving average, and then climbed to our new all-time closing high right now at $619.23. Then it rolled over, and it rolled over pretty hard here, fell down below the 20-day moving average, down below the 50-day, all the way down to where we are now. And again, it is just before closing now. It's closed or trading today at $576.40. So we say, okay, now what do we do with this? Because it broke some of these prior lows here. Well, let's first look for the resistance. It is sitting on its 200-day moving average. That's a good thing. So we've got January lows here at 575. So that, and we're trading right now at 576. So see if it can get over. It was 576. That's a little bit above, of course, 575. We won't argue with that small amount there, but hopefully it can get up past this. Then it will have to go up, and it will have to get above the 20-day and 50-day moving average. 20 days now crossing at $596 and change. So it's got to get through that. Then back up here over these consolidations, and it will have to get back up here, back all the way up to the highs at 614. So where do we have support here? Well, we have support right now at the nearest buy support is at the 200-day moving average, coming in at $571.84. So again, right about 572. If we look left on the chart, we can see these October lows, and that comes in at 568. So let's call that. So that would be a potential support low right here. And we do have more support lower you can't see on this chart. It's September low at 539. Hopefully we don't have to use that. That would be all the way down to here. So hopefully it can stay now right above its 200-day moving average. But we could rally into next week. And while I hope so, hope is not a strategy in the stock market. So we want to see here if it conforms some kind of a bottom or a rally up, come back down, retest, and then go back up. Again, keep an eye on your protective stops. If you do get in, as I'm going to say all the way through this, trade what you see, not what you think is going to happen. Our next chart is a daily chart of the Invesco QQQ, symbol QQQ. This is the ETF that follows the NASDAQ 100, which is the top 100 non-financial stocks in the NASDAQ stock market. And of course, this index includes the large cap momentum stocks like Meta, like Nvidia, Apple, Tesla, that whole group. So it can be pretty volatile. Now, when I captured this chart today, the Qs were trading at $492.10. This is 9% below the all-time closing high back up here on February 19th at $539.52. So, of course, as I said before, and you already know, I'm sure, tech stocks are a lot more volatile than a lot of the S&P 500 stocks. So although a lot of them are S&P 500 stocks, but still, this is a more volatile group. It's the non-financials. So since the December high back here, if I didn't just say this, excuse me, the closing high is 9% below the all-time closing high. Well, we're trading now below that. And of course, you've heard a lot lately about corrections. So we are very close to being in a correction. This particular ETF is. That's 10% below the all-time highs. So since the December's highs back here at 538, the Qs fell down here. they, just like they did with this, like the S&P 500 did, it started getting a lot more volatile here. That was a nice uptrend we had before, but in December it all started. So here on the December high at 538, the Qs fell down here to the 50-day moving average at 509, then rallied back up to 531, then down to the January low down here to $499.70, call that 500. Make it easier, rallied back up to 533, then gapped down here to 510, then rallied, climbed back up, and like the SPY, did a kind of a consolidation move here along the 50-day moving average, then climbed up again to the new all-time closing high, February 19th, at $539.52, then rolled over hard and dropped down to where we are today, again at $492.10. So we say, okay, where's the resistance here? What do we have to fight to get back up? It closed today just below the 200-day moving average. The black line is coming in at $492.84. So it's got to get back up over that. So call that 493. It's got to get back over. It's got a couple of points to go here. We did have this January low here at 500. So that could pose some problems right here. Then we've got up here to 510. There's a couple of lows here at 510. It may have to fight some of that. Then we'll go up to the 50-day again and the 20-day. The 20's crossing down over the 50-day at the moment. So that's up around 517, 518, 519. This could pose some problems. We'll have to see, though. Maybe, maybe not. And then back up, of course, it's got to get back up here, back to the all-time highs at some point here. And see if it can get back over this this all-time high at 539, 500. We'll call it $540. So it's going to take some muscles to get back up. It's going to take a lot of buyers to get it back up there, and it may work for sure. But we'll have to see. I would suspect it will take a little while to get back up there again. We do have September. We do have potential price support down here at October lows at 483. So that comes in just a little bit below where we are now. That's potential support. And we have September lows. You can't see it on this chart, but they're way down at 448. Hopefully, we don't have to watch anything like that. But again, hope is not a strategy in the stock market. So just know where everything is. Try to be very, very patient. And again, I want to see signs of a true bottom before I start pulling up the truck to, backing up the truck to start buying a lot more stocks here. Nibbling a little bit with a stop is one thing, but I'm certainly not going to overdo it at the moment. I want to watch and see what happens. So again, please remember, trade what you see, not what you think will happen. Our final chart today is a daily chart of the S&P Global Water Index, the ETF, the CGW. We haven't looked at this for a while. When times get volatile in the stock market, as you may know by now, I tend to wander off into a place where I don't think everybody else is looking. And certainly, if there's one thing everybody in the world needs is water, and a lot of these stocks have sold off from that because they're not that interesting when tech stocks are rolling higher, that's for sure. So there's like 3 water ETFs I can think of, and a lot of the stocks in them have sold off and come down to January lows like everybody else. But I'm looking at this now thinking it doesn't look too bad as somewhere to maybe sit, grab a little bit, and watch what else is going on. So again, this is the CGW. It has 63 holdings. Top holdings include Xylem, American Water Works, VLTO, Essential Utilities, and Ecolab. And also, guys, when you say, well, Toni, why do you always have to put in ETFs and not stocks? I do that because ETFs are not quite as volatile as stocks, and I don't want anybody hurt. But what you can do, and what I do, is I go into these ETFs. I'll go to the Invesco website. I'll look and see the top holdings in something that's looking good. And then you can pick out some of those top stocks and see if they have good patterns and trade them. So then you're right back into stocks again, only you know you're in a sector or industry group that at least looks good on this chart. So that's how I do it. Today, when I captured this chart, the CGW right here was trading at $56.87, trading above its 50-day moving average, which is coming in at $54.85. Trading above its 20-day moving average, which is coming in at $55.66, and a little bit below the 200-day, which is coming in at $57.52. Now, a little bit of history here. You can't see it on this chart. The CGW made an all-time high in November of 2021 at about $61, so we're close. And now, looking at this chart, we can see on September of 2024, this was a retest of that prior high in November of 2021. Now we're looking at September of 2024 right here. And also at this point, the CGW made a high here at $61.55. So it came back up to meet that high. Then it headed lower, and as you can see, it headed down to November 1st low at $57.32. It rallied back up here to $59.70. Then it dipped down here. Then it came back up and retested that high right there. A little bit right back up to 59 right here. Then it fell down, and it fell pretty darn hard. Everybody fell in January, but this fell really hard, down to the January low at $51.78 right here, $51.78. Then it rallied back up through the 20-day, back up to about $55. Then it started just edging higher here, staying above the 20-day, finally moving above the 50-day moving average in February, then consolidating along this line again this month. And then in March, today, it broke out. And one of the stocks in this today that I was looking at was up 5 points. American Water Works was up about 5 points today. So these things can move. So again, up to where we are today at $56.87. Now, we are just below the 200-day moving average, coming at 57 and change. But I like this consolidation and breakout. And again, a lot of that had to do with American Water Works. If in the coming week, the CGW can stay above the 50-day, and the 50-day is down here at $54.85. If it can stay above that, I may buy a position of CGW in my trading portfolio, and I'm going to put in my stop below the 50-day moving average at $54.25. Now, if and when the CGW can move up over the 200-day moving average and close above $57.75, I will add to my position, and my stop by then will be a trailing stop. So you may want to keep an eye on the CGW in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. How to bottom fish like a pro, and that is right down here. How to Bottom Fish Like a Pro is the perfect training program to help you start buying low and selling high right now. I looked at so many ETFs and stocks today that have come way down, and they're bouncing off their lows, their prior lows. So this is a great program right now for you to learn how to do this. You'll discover how to recognize key trend reversal signals, target high opportunity entrant points, and how to manage the trade to take the best profits from uptrends. Our new low price for this program is only $199, How to Bottom Fish Like a Pro, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. And once you purchase, you have unlimited access to learn at your own pace. So once you get it, go as fast or slow as you want. So from our ever popular 7 steps to successful trading, how to swing trade successfully, trade the trend to profits, another fantastic one, how to read charts, great for novices, 3 winning setups, great for short-term traders. Find out how my online programs can help you earn more money quickly and easily. Check them out now by going to the link on this screen, or easier still, just click on the orange button below. Until next week, please be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.